Good day and welcome to the Q3FY22 earnings conference call of Prevest Denpro Limited, hosted by Hem Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. At that time, should you have a question, you are requested to press star and 1 on your telephone keypad. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asta Jain from Hem Securities. Thank you, and over to you, ma'am.
Thank you, Margaret. Good afternoon, ladies and gentlemen. Thank you for joining the Prevest Denpro Limited Q3 FY22 earnings conference call. Joining us on the call today are the senior members of the management team, Mr. Atul Modi, Chairman and Managing Director, Mrs. Namrata Modi, Whole-Time Director, and Mr. Vinay Jambar, Financial Advisor of the company. Before going ahead with the conference call, we would like to congratulate management of Prevest Denpro, Managing Director Mr. Atul Modi, for receiving the Outstanding Entrepreneurship Award conferred by Jammu and Kashmir government on the eve of Republic Day. Now, going ahead, we will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you might have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature. The actual results may vary from these forward-looking statements. I would like to hand over the call to Mr. Atul Modi to commence by sharing his thoughts on performance and strategic progress made by the company. Thank you, and over to you, sir.
Thank you, Asta. Thank you very much. Can I start now?
Yes, sir.
Good evening, ladies and gentlemen. I hope you and everyone in your family is safe and healthy during this difficult time of the third wave of COVID. I take this opportunity to welcome you to the Q3 and 9 months financial year 2022 earnings call of our company. We have already uploaded our financial statements and brief presentation on BSE and hope you had the opportunity to go through it. Despite the impact of global COVID-19 pandemic and international logistic challenges, our performance was outstanding in the 9 months and third quarter of financial year 2022 across all parameters. I would like to highlight that the demand for our products continues to grow over 30% currently, and with our focus on brand promotion, increased sale and distribution network, and with the introduction of new products, it is expected to rise sharply in the coming times. Our expansion and modernization of existing factories is progressing satisfactorily. Procurement of new high-tech equipment is being processed and other required infrastructural changes are being implemented. The Research and Development Center building is ready and procurement process for the equipment has been initiated. We hope that our R&D center will be operational in the first quarter of financial year 2023. The new facility for manufacture of oral care, oral hygiene, and other products is progressing well and expected to be completed in first quarter of the financial year 2023, and it should be fully operational by the second quarter of 2023, subject to regulatory approvals. I would also like to give you an overview of dental market. Some of the primary factors that have positive influence in the growth of dental industry include rising causes of oral diseases, increasing per capita income, rising awareness about oral health, and increasing government spending on dental health services. As per the WHO data, globally 3.5 billion people are affected by oral diseases, which are predominantly caries of permanent teeth, periodontal diseases, and oral cancer, and therefore need for dental treatment is growing. Besides the dental diseases, there is a growing demand for cosmetic dentistry, which is another promising area of business for dental industry. The dental industry has therefore a very bright future with a steady and sustainable growth. With the implementation of expansion of our existing business, diversification into oral hygiene, oral care, and biomaterials project, we believe that we will be able to cater to the dental professionals with a much larger product portfolio covering all major segments of dentistry. Lastly, I would like to assure all of you that with our own state-of-the-art research center, collaboration with various dental institutions, eminent advisory board, and newer innovative high-quality products to be introduced in near future, our company is well on track to achieve its transformational goal. Thank you once again. Now I will hand over to Mrs. Namrata Modi, Executive Director and CFO, to give you an update related to the financial performance. Over to Namrata Modi.
Thank you, Mr. Modi. Good evening, ladies and gentlemen. I am starting with financial results. During the first 9 months of financial year 2022, we have reported a revenue of rupees 2,954.18 lakh, EBITDA of rupees 1,291.28 lakh, and PAT of rupees 910.64 lakh. The PAT margin of our company stood at 30.83% and EBITDA margin of 43.71% for Q3 financial year 2022. In the 9 months of financial year 2022, our export business has grown by 84% and domestic business has registered a growth of 42% over previous year. The high growth in export business is attributed to entry into 5 new countries, namely Saudi Arabia, Colombia, Netherlands, Malaysia, and Senegal. And increased marketing efforts have resulted in impressive growth in the domestic business despite COVID-19 challenges. It is evident from our financial figures that both top line and bottom line registered impressive YOY growth, and we are confident of maintaining the same momentum in the coming years. With a strong business fundamental and receding COVID-19 wave, we have a positive outlook and very optimistic view of good performance in last quarter of financial year 2022. Once again, I thank you all, and now we can start with question answer session. Over to Astha, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Satvik Jain from Generational Capital. Please go ahead.
Yeah, thank you. So first of all, congratulations on the great set of numbers and the transparency you are showing right from listing, holding earnings calls and doing an investor presentation. So I was just going through the financial statements. So currently we have like 8-9 crores of assets, and we are doing a 11 crore quarterly run rate in turnover, implying an annual run rate of 45 crore turnover if we go by the same rate. So that broadly takes us to a 5 times asset turnover. So now I was just calculating, and you can correct me if I was wrong. We are doing a 16 odd crore of capex. So implying the same run rate, can we add around 90 to 100 crores from the new capacity, taking the total turnover to 140 to 150 crores? So that was my first question.
I will request our financial advisor, Chartered Accountant, Mr. Vinay Jamal, to answer this query.
Good evening to everyone. The reply to your query starts from your first question. That is, we are working at a capex of, we have a capex of, say, 8 CR, and we are achieving a turnover of 11 CR. And with we move for the on yearly basis, we are expected to have a capacity turnover of 45 CR. For the current year, that is 2022, we are expecting. We are growing at a say asset turnover of around 5%, but with the installation of new plant and machinery and along with the building, the capex will definitely increase. And for the maintainability of that asset turnover ratio, we will achieve the same turnover ratio within say 4 to 5 years. We will reach at the same asset turnover.
Okay. That was helpful. And so essentially, when can we, so in next 4 to 5 years, we can expect the full functioning and utilization of the new capex which we are doing, if I'm right?
Yes. By the end of say 4-5 years, we are going to achieve a maximum capacity utilization of the existing as well as the proposed installation of expansion of the existing unit as well as the installation of the new unit.
Sure. That was helpful. Thank you.
Thank you. The next question is from the line of Pranay Jain from Dealwell Capital. Please go ahead.
Thank you for this opportunity and my compliments on a strong set of numbers. Also, I appreciate the disclosures and the improving granular details which are being shared quarter after quarter. So thank you, and we look forward to the same. I have a couple of questions. One being, since our export thrust is getting stronger and our domestic visibility is also increasing, say over the next 2 years, what is the overall revenue that we can look forward to? And if you could share some idea of what our export pie can be in 2 years' time from the present level?
Myself, Atul Modi, I am the Managing Director. I will give you the reply to this query. Our export business is growing. Our domestic business is also growing. Our export business has grown by about 60% in this last quarter of this third quarter. And overall export growth in this 9 months is around 80%. We are maintaining the same growth. We are hoping that we can maintain the same growth, and in the next 2 years, we should be touching around 60, 65 CR, above 60 CR with export and domestic sales, because both the domestic and export business is growing. So we are very confident that our journey will continue and our exports will grow. Our domestic business will also grow in the same proportion. And maybe we can hope for a better growth because, we have been passing through the COVID pandemic in the last couple of years. In spite of COVID pandemic and, many other challenges related to COVID, our company has performed extremely well. We are very, very happy with our performance in the last 1 year. So this growth journey will continue, and our business will continue to grow in the domestic market and then the export market.
Thank you. And with regards to the export side, can you give us an idea which will be the new markets that we would have entered in FY23, and also a sense on which are the margin accretive products, either in development or those which are near to launch, that we are going to bring to market domestically and overseas in the next 12 to 15 months?
See, one thing I want to inform all the investors and the analysts who are present here that our company has recently received MD SAP certification. And our company is the only company in India in the dental manufacturing which has been, accredited with this certification. And this certification opens our doors for Canada, Brazil, and Australian market. So far we have not been able to export to these countries because we were not having this certification. We have received this certification. Our thrust in the financial year 2023 is America, Canada, Brazil, and Australia. So these are very promising markets. These are very high-priced markets. We are hoping to enter these markets, and in 2023, these markets are going to add to our revenue and also improve our profitability because these are very high value, high price markets. So our first will be export to these countries because, in other countries we have already established our business network, and, products have been very well accepted. We have a very strong dealers in about 80 countries already established. So with a, annual business growth coming from these countries around 20-25%. So that will continue. But our focus will be on Saudi Arabia because we got the recent certification approvals from Saudi FDA. So our focus will be Saudi Arabian market. It's a huge market. Our focus will be on the US market. Our focus will be on the Brazilian market. Our focus will be on the Canadian market. So that is the area where we are going to, focus in the next financial year.
Understood. So with these certifications, have you also completed most of the groundwork that's required, whether it is in terms of marketing presence or distribution tie-ups, or that is something which is still happening at the moment?
We have already started this groundwork. We have already started talking to many of the customers in these countries. We have already submitted our samples to some companies. We are also planning to visit these countries in 2023. So we are now planning to exhibit our products in the important national, international trade fairs, in Brazil, in Canada, in other countries, to showcase our products, to be present there so that we can have a direct customer contacts and build our business in these countries at a, easy and faster way. So already we have lined up our participation in 4 international exhibitions in 2023 that will generate business from these countries.
Thank you, but just had a small point, since most of our capex is getting completed and coming on stream in a couple of quarters, and growth is now going to maintain its momentum, profitability will pick up. What is the shareholder return objective that we have in mind, whether it is through dividend payment or otherwise going forward from next year?
See, we have not yet decided anything on this part. Definitely we are waiting for the end of this financial year. And after having the annual financial reports results, then we will decide about the dividend and share rewards to the shareholders. But at the moment, I cannot give any commitment because it is still the we are still in the middle of the financial year. So let the financial year close. Let's see the end of the financial year and our results for the next quarter, for this quarter, and then we will decide how to reward the investors.
Thank you so much, and wishing you all the very best for the journey ahead.
Thank you so much. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for that. We just wanted to clarify one point. You told next year you're targeting 60-65 crore of revenue. Is it?
This year we are expecting to be around 40 CR. And if we continue with the same, rate of growth or better growth, so definitely our next year performance will be much, much better than this year.
Sure. Okay. And so
this year our growth is around 33%. So we maintain the same growth. So you can work out our next year's annual, expected business.
Sure, got it. And so, just wanted to understand the approvals that we have, like US FDA and MDSAP. Normally in pharma companies, we have seen that, getting US FDA approval requires a lot of stringent inspections, and, the plant maintenance and upkeep has to be very good. You have to follow certain procedures. So how is it like that? And for dentistry products, if you can talk a bit about that.
We have a very strong regulatory team. We have 5 dental professionals working in our factory full time. They are trained for the regulatory compliances. They have been provided training, different types of trainings to comply to the regulatory requirements of different countries. They are complying with the US FDA requirements. They are complying with the Canadian requirements. They are complying with the Brazilian regulatory requirements, and they are also complying with the US FDA requirements. So the requirements are very stringent for all these countries, but we have the capabilities and capabilities to comply, and our facility is world class. So it is very impressive factory. So we are complying to all regulatory requirements of every country. We have complied to the MDSAP, regulatory requirements, and our company is the first company in India. And there are very few companies worldwide who have been accredited with the MDSAP certificate. That's a big achievement for our company. Our company is the first company in India which has been, which has got the Saudi FDA clearance also. So we are now exporting. We already started export to Saudi Arabia, and we have very, high hopes from Saudi market because our products are very well accepted in the Saudi market. And in the last couple of months, we have already done about 62 lakhs of business in Saudi Arabia. Recently, our marketing team was attended a dental exhibition in Saudi Arabia, where they came in contact with many dental professionals who are so excited to see the products from India. And we are very confident that our business in Saudi will be very, very good in the coming years. Similarly, as we have complied with all regulatory requirements in different countries, it is only possible if we have a strong regulatory team. We have a regulatory team which is headed by a very highly qualified dental professional. He is highly trained in the regulatory affairs. He is also a PhD scientist. So it's under his control, all regulatory compliances are being fulfilled and complied, and USFDA clearances has been obtained. We are waiting for clearance for another about 15 products which are expected in very soon. So we'll have a very good portfolio of products for the US market. So the next, the growth for the Prevest will be from these countries, from Canadian, from the American countries, and from Saudi Arabia. So we are very confident our growth journey will be export business will grow much faster in the next financial year.
Sure. So, sir, my another question was on the new facility that we are setting up, and we are entering into sanitizers, disinfectants, mouthwashes, and mouth rinses, and other, ointment gels for the dental treatment. So, just wanted to understand the rationale behind getting into, sanitizer, disinfectants, and mouthwashes and mouth rinses. This area has become very crowded, and especially the sanitizer.
Sanitizer is only a one product which is there, but our focus is not on sanitizer, because we are setting up the facility which can manufacture sanitizer. So that is why we have included sanitizer also in our product line. But our focus is not on sanitizer. Our focus is on disinfectants for medical devices. These are very special type of disinfectants, not the normal disinfectants, which are used in household or for other. These are very high quality of disinfectants which are used for the cleaning, for the treatment of the medical devices. So every dental office, every dental clinic requires disinfection. So as we are into the dental business, so we are, making products which are used by the dental professionals as a for the treatment or for the disinfection of their dental clinic. The mouthwashes and the mouth rinses, they come as a preventive treatment. They are for the prevention of the dental diseases. So most of the dental diseases, I have explained in my address that most of the dental diseases come from the caries of the permanent teeth and periodontal diseases. Periodontal diseases are the diseases of the gums. And for prevention of these diseases, so we are making very innovative, high quality mouthwashes and mouth rinses and some oral gels. So those will be, something new for Indian market. It's not normal Listerine or other, types of mouthwashes. We are coming out, our own research department is developing very innovative and different type of mouthwashes and mouth gels which are not currently available in the in Indian market. Those are available only in the European market and then the US market. So we are focusing on very different range of mouthwashes and mouth rinses and oral care products. So one part of our business is for the treatment of the dental diseases. Now the other part of the business where we are entering is for the prevention of the diseases. So we are covering the entire spectrum of the dental treatment and oral care. So this is, in line with our existing business. So I think that we will have a very good product portfolio in the coming years and the next financial year. That will be very attractive. When the products are ready, we'll showcase the products. And I am very sure that you will be excited to see the products which we are going to make.
Sure, great to hear that, sir. So my last question was on the EBITDA margins. If you look at our EBITDA margins, 5-6 years back, they used to be around 13-15, or in 18 we had 20% kind of margins. We have seen our margins have increased substantially to 43%, in fact 44% in 9 months of FY22. So if you can talk about what has led to this significant improvement in margins over the past many years, and how sustainable are the margins?
Mr. Jamal will give you the reply. He is our financial advisor. He is chartered accountant. Mr. Jamal will give you the reply to this query.
Sure. Good evening to all of you once again. I am Vinay Jambal. Your query, as far as your query is concerned, our performance in the current and the just concluded quarter is fantastic in spite of the fact that we are going through the COVID pandemic. And as far as the performance margins are concerned, in the last quarter, we increased, in the last financial year, our margin was say around 33%. Now we have achieved a margin of a net profit margin of around say 43%. Now this has been achieved due to the products that we are sold during this quarter, which is high margin products. The margin on these products is quite high as compared to the products that we were selling say 1 year ago. Now if we move to the coming year, what we are doing, we are expanding the existing product line also, and in addition to the new line. With this expansion and with the addition of new product line, our margin will further increase, which will be based on a couple of factors. One is that we are, as already discussed by the chairman and managing director, that we are entering into new business areas which are not catered in the earlier year. From there, the export margin will increase, and our profitability margin as well is very good, and we are considering it's a high margin we are expecting and we are getting from the export sales. So if you go by this quarter, you will see that the percentage composition in the export in the sale as well as export is concerned is around 63%. And we are not only, that doesn't mean that we are not catering to the domestic market also, but we have very good orders in hand as far as the export is concerned. So the profitability will increase by a good margin. We also expect that the profitable margins will further increase in the years to come. And moreover, our percentage sales as well as domestic market is concerned will also be improving at a good rate, since we are into enlarging our dealership network in India also. So we expect a very good margin in the years to come. Thank you.
So just a follow-up on that. Do you think the margins of 44% are very high? Best of the companies don't do this kind of margin. So I just had some doubt about the sustainability of this kind of margin. EBITDA margins of 45% are unheard of, even in large pharma companies or even in companies in patented products.
So Mr. Atul Modi, who is the CMD, will answer to this query.
Gotcha.
See, you cannot compare our products with the pharma products. Our products are very specialized products. These are value-added products. These are formulations which have been developed in-house in the last 20 years. And these products are very specialized products, so you cannot compare the profit margin of pharma products with dental products. So we are maintaining this profitability right from the beginning. Our profit margins have been consistently good, and they are growing because our overall business is growing, so the profitability is also growing. So it is very evident if you look at our balance sheet that our raw material consumption and our other expenses and our net profit is very, very evident that our profitability is very good and it can be maintained, and it has been already being maintained for many years. If you look at last 5 years figures, our profit margins have been growing every year. It has been consistently growing, and we are confident that the margins will continue to grow further.
Okay. Thank you so much, and wish you all the best. Yeah.
Thank you so much.
Thank you. The next question is from the line of Dhruv Bheda from Jairam Stock Brokers. Please go ahead.
Thank you for taking my question. At the outset, I would like to thank the entire team of Prevest for generating such returns and having such great quarter. My first question is, what is the current installed capacity and what will be the capacity coming up in the next couple of years, say ending FY23 and FY24? See, the rationale for asking this question is, after getting all the certification from after getting the certification, we can see that there will be a lot of demand coming in for Prevest. But do we exactly have the capacity to produce this, or will Prevest be going for contract manufacturing, or are you looking for some inorganic opportunities?
First of all, I want to tell you that our installed capacity is 150 metric tons, and we have utilized about 85% capacity. And from this IPO, we have taken about 2 crore rupees for the modernization and expansion of our existing capacity. In my address, I have already informed that we are going ahead with the expansion of our existing factory. Already we have ordered the new high-tech equipment which will enhance our manufacturing capacity so that we can cater to the growing market demands. And we are very conscious about the business growth, that the business is growing and the business will grow further in the coming years. So we have to have enough capacity for the next 4 to 5 years. So keeping that thing in mind, we have kept a provision of funds in the IPO for the modernization and expansion of our existing business. And that expansion is going on and it will be completed by the first quarter of 2023. With this additional capacity will be sufficient for the next 4 to 5 years, and we can easily cater to the requirements for the next 4 to 5 years. And another important thing is that this capacity is based on our single shift basis. If the demand is further increased, we have the option of operating our factory on a second shift or on an extended shift. So that option is also there. But at present, we are comfortable with working in single shift and we are able to fulfill the market requirements. With the additional capacity which we are creating, we will easily cater to the market requirements for the next 4 to 5 years. We don't have any intention to go for the contract manufacturing because these are the trade secrets. The formulations which we have developed, we don't want to disclose. So we want to maintain the manufacturing activity within our premises, within our control, and we can manage with the capacity already we have and the capacity which we are going to build.
Okay, thank you. And are you looking for any inorganic opportunities? And what will be the capacity addition which you will be putting up at the end of FY23 in volume terms?
Inorganic acquisition, we don't see any business of that type available in India for acquiring because we don't have any company which is of that standard in the dental business. So we don't see any opportunity in India. We are looking for the opportunity outside India. If there is an opportunity to acquire any business, we will see if overseas any opportunity exists, we will consider that. But India, because the dental industry is a very small industry, there are very few companies in India which are manufacturing dental materials. And they're all small, fragmented companies, they are unorganized. So we don't have any intention to take over or acquire any, company which doesn't have any, good product quality or infrastructure. So we will rely on our own strength and we will grow on our own strength and we will we are spending 8 to 9 crore rupees on R&D activity. We are developing India's best R&D center for dental products development. So we will rely on our own strength and we will grow on our own strength, and I think we can achieve that. It's achievable. We have been doing it in the last 20 years. We have such a fantastic track record. Growth is fantastic. So we will continue this momentum and we'll continue with the development of our own new innovative products, value-added products, so that our our profitability goes further up and we can sustain this business for a long, long time. So this is our vision, and we will continue with this plan. And very confidently, we will reach to our projections in the next 4 to 5 years. So this is achievable for us with our internal, our inherent strength and our talent which we have. They are, quite capable of developing new products, and we can fulfill the market requirements with our own infrastructure.
Okay. Thank you for that elaborate answer. My last question is, after receiving the MDSAP certification, what will be the line of action of Prevest in terms of marketing our products? In US, as you had mentioned that you have appointed 2 to 3 agents, you are working closely with them. So what will be the marketing strategy for, say, Canada, Brazil, Australia? And what are the approximate EBITDA margins which you are expecting while entering these new countries?
See, I can only tell you about the business strategy for these countries. About the EBITDA margin, our chartered accountant, financial advisor will give you the reply. But I can only tell you that because I am looking after the business, the finance part, Mrs. Modi and Mr. Jamal, chartered accountant, they are taking care. About the business strategy, certifications, we got all regulatory compliances for export to USA, Canada, Brazil. These are the growing business opportunities for our company. And with all these certificates, we are going to encash this opportunity, and we are going all out, making all out efforts to sell our products in these countries. And we are going to take part in the international exhibitions. We are going to attend exhibitions in US. We are going to attend exhibitions in Brazil. We are going to attend exhibition in Canada. Recently, we have attended exhibition in Saudi Arabia. That was a very successful exhibition for us. We developed very good business contacts there. We got a contract for sale. So like that, once we display, once we showcase the products in those countries, we get contact with the local distributors, dealers, and business people. That helps us in, developing the business network in those countries. So in this 2023, our focus will be on these countries because we are now fully geared with all quality certifications, approvals. We are fully geared to enter these markets, and we'll encash on this opportunity and make use of all the best certificates which we have. Regarding EBITDA, I will pass on this call to Mr. Jawal, our chartered accountant and financial advisor.
Thank you, Modi. As far as the EBITDA is concerned, let me first of all share with you that EBITDA, as far as the current year is concerned, we have just completed 3 quarters. And if you go by the financials of the 3 quarters which have just passed, our EBITDA for the 3rd quarter is 43%. And what we have projected an EBITDA of say 40%, more than 40% for the whole year. But since this quarter, for the 3rd quarter, we have crossed the budgeted our targeted EBITDA. this is due to the reason that our export composition of export in our sales has increased, where we have a good margin as compared to the domestic market. But this is one thing why our weight has increased, and this is the present scenario. And if we move forward to the future, what we expect that as Mr. Modi had just discussed, that we have entered into n number of foreign markets where we have got new permissions and certifications. We are entering new markets where we are supposed to get a very good response. If our export composition in our sales increases, our EBITDA will definitely move further. Not only it will restrict to 40%, it may go up to exceeding more than 40%. And this is very much achievable depending if we showcase our past performance to the investors. You will see that as initially in the last year we had a export turnover that was around 55% of the total turnover. Now it has increased to 63%, and in the coming year, the management is very much, it has a very positive about the further growth in terms of export sales. So the EBITDA in the coming years will definitely improve from the existing percentage also.
Okay, thank you. Thank you so much. That's it from my side. All the best for your future quarters. Thank you.
Thank you so much. Thank you.
Thank you, ladies and gentlemen. In order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Yogansh Jaswani from Mittal Analytics. Please go ahead.
Hi, thanks for the opportunity, sir. So I was just going through the...
Sorry to interrupt you, Mr. Jaswani. May I request you to speak on the handset mode, sir? Your audio is not very clear. I think you are on speaker.
Better now?
Yes, this is better. Please go ahead.
Yeah. So I was just going through the presentation, and we have mentioned that we have a couple of products which are approved by US FDA. So just a quick clarification there. Is it a product-based approval or is it a plant-based approval? How does it work in our business?
Okay, I'll reply to your query. Myself, Atul Modi, I am the Managing Director. Our products come under the medical device category. So medical devices have a different route of approvals. This is not the approval of the facility. It is the approval of the product and product's composition, product's other regulatory requirements. So it's a different procedure. For medical devices, US FDA procedure is different. It is very stringent, but the plant approval is not required. Only the product approval is required. So our products have been approved. So plant approval is on the basis of a quality management system, which we present to them. That's our QMS. QMS is a quality management system. So for that, we have got the MDSAP. So MDSAP covers the quality management system. If we have MDSAP clearance and we have the product clearance from the US FDA regulatory team, our product is cleared for sale in US market. So this is the procedure for approval for the medical devices.
Right. That's helpful, sir. So, sir, what are these 5 products that we have approval in USA, and also are these the same products which we are selling in the export markets and the domestic markets? Basically, what I'm trying to understand is what are our current top-selling products, and are these 5 products part of that basket?
Yes, these 5 products already we are manufacturing and selling all over the world, but we have now received the US FDA approval for selling these products to the US market. We have already submitted, we have now talking to different customers in US for these 5 products. But these 5 products are very small in terms of the product portfolio. Any company is not interested in only 5 products. They want a very bigger range of products. So we have applied to US FDA for another 15 products approval. We are expecting that we have submitted all documents, all regulatory compliances have been completed. There have been many review committees, review meetings with US FDA, and we are expecting that we'll get the approval. Then we'll have a much bigger portfolio of the products to sell in the US market. We cannot spend on the marketing activity for 5 products in US. If we go to any company or if we set up our office in US for 5 products, it will not be viable to have a office only for 5 products, or having a marketing team in US only for selling 5 products. So we are waiting for other products also to be approved so that we have a bigger portfolio, so that when our team visits US in meeting the different customers, they can present about 15 to 20 products to them. So this is our plan, that in another couple of months' time, when we get the approval, we will start this process. Already we are in talk to many companies in US. We have submitted our samples. They are evaluating, because these are dental materials. Evaluation also takes time. In spite of the regulatory clearances, the customers also want their own clinical trials and testings. So this process is going on. So in a short time, we will start our business in US market. Once we have the approval, then selling will not be a big issue. We will definitely get good business in next financial year from the US market.
Right. So, sir, what are your top selling products? We missed that.
Our top selling products, are dental composite filling materials, dental cements, cavity liners. These are the top selling endodontic range of products and prosthodontic range of products. These are internationally, these are the maximum used products. Endodontic is for the root canal treatment. Prosthodontic is for the restoration of the broken teeth and for the damaged tooth. So these are the major consumption items. So these are our fast moving, and these products, are the main revenue generation for our company. Dental cements and different types of composite filling materials. So these are our special and fast selling products.
Understood. So last question from my end. So I was just going through your prospectus, and as per that, in last 3-4 years, our capacity utilization has been going down year on year from 96% to it was down to 73-74% in FY21. And like our CFO mentioned, that it has again climbed back to 83-84%. While our turnover has increased every year since FY19, and in 9 months so far, we have clocked a significant jump. So can you just explain to us in more detail what is driving this increase? We are selling lesser and lesser quantity, but we are churning out higher and higher sale with a higher and higher margin, and 40% kind of EBITDA margins are really great. So if you could just talk more in detail about how are we doing this? Is there a big change in the kind of products that we used to sell 3 years ago versus now, or is it also because of some bit of supply chain disruptions and the prices have shot up and there is a probability of it reverting back? If you could delve a bit more on that.
No, I will explain to you. Actually, our capacity is in metric tons. So some part of the capacity was for products which were low value products, and those are very heavy products like dental gypsum products. So we decided to reduce the sale of those products because they were not contributing much to the revenue generation, and also they were not profitable products. So we reduced their production and increased the production and sale of the high value products. So that's why our capacity at one time was utilization was high. It came down to 75% because we stopped manufacturing some products which were not at all profitable for our company. So those were removed from our production and they were replaced by high value added products. So our business revenue was increasing, capacity utilization was low. So that's the reason for that. Now also we are focusing on value added products so that our concern is that our volume and the profitability should increase, our revenue should increase. Within the same capacity, we should operate with a higher profit and more revenue generation. But at the same time, we are now rebuilding our capacity with some money reserved in the IPO for the expansion. So that will rebuild our capacity, which will be sufficient for the next 4 to 5 years. So basically, it is product mix. So the low value products have been removed, high value products have been added, and that has increased our profitability. That has increased our overall revenue. So that has contributed in the growth of the business.
Right. That's helpful, sir. Also, sir, I was just noticing another thing that out of the 18 crore capex that we have planned as per our IPO, we are spending 8 crores on the R&D. Even I think to a previous participant, you touched upon this R&D expense that we'll be doing. So looking at the current setup that we have in terms of 5 crore, 6 crore out of fixed assets, and now the upcoming expansion, a big chunk is going into R&D expense. So if you could put some more color on what exactly are the capabilities that we are trying to create. Also, if you could talk about what kind of R&D team that we have at the moment and how are we, looking to scale up through this R&D. 8 crore is a big number given our current setup. Hence, just trying to get a sense.
The R&D is a very important part of the business. So far, we have the products which we have developed and what we are selling are all developed in-house. But we had a very limited research and development facility available. And that has taken us a long time to develop the products. Our company has decided that we should build an R&D center with the best equipment so that we don't have to run here and there for product development and product testing activity, which delays the product development process. So we are now focusing on the future. Because, the future, if we have to look at the future, we have to have very innovative products development. We cannot sustain with the present product line for a long time because the dentist needs are changing every day. The dentists are demanding more innovative packaging, more innovative quality and convenience for use products, and more, compatible products, bioceramics. So that's the future. So we are looking at the future now. You are talking about 8 CR today. I am looking at my company 10 years on, that how this company is going to be after 10 years. So that's the kind of vision we have, that we have to have a very strong R&D in-house so that we can sustain for years on years with our own internal research and development activity. Second, the importance of the R&D is that, upgradation, improvements in our existing product line also. You see, there is a scope for improvement in every activity. So this is also very important that we have a very strong R&D center where we can continuously upgrade our product line and also develop the new products. We are setting up a new facility for manufacturing very high-tech and innovative line of mouthwashes and mouth rinses and oral hygiene products, bone grafting materials. So all these products require research and development activity. Without that, how we can produce a product. We do not have the ready-made formulation available. If we go with a ready-made formulation, so hundreds of people are making that product, so we cannot be competitive. We cannot be, so we have to have very innovative range of products. If we have to make Prevest as a global company, if we have to make Prevest as a high profit and high revenue company, we have to have a very strong R&D activity. Then you are asking me that what kind of R&D team we have. Our R&D director is a highly qualified dental professional. He is Master of Dentistry. He is PhD in Dentistry. He has got 16 years of research experience, and he is the Director for Research and Development Activity. We have two scientists already working on the product development, but we do not have enough infrastructure. So we are, handicapped in the product development activity, although we have good team, but we do not have the adequate equipments and adequate testing equipments for the product. So we have to, so that's why we have done, it's an investment for the future. If we say today that we are spending 8 crores and it's not giving us any revenue, increase in the revenue, I will say that we will be wrong in saying that. My vision is that this R&D will bring stability to the company, will help the company to grow and help the company to be above all our competitors. So that's the vision which we have, and that's why we are going to have a very state-of-the-art, I'm going to use the word state-of-the-art R&D center. This will be the first dental research center in India, in the private sector. So we are very confident that this is going to be a future requirement for our company.
Thank you. I would request Mr. Jaswani to rejoin the queue for follow-up questions. The next question is from the line of Pranay Jain from Dealwell Capital. Please go ahead.
Thank you for the opportunity again. With over 100 products that we have in our portfolio right now, and 5 already approved for US, 15 in the pipeline, what can we look forward to? Again, my view is not near term, but say a couple of years down the line, can we have maybe 40 to 50 products from our basket available for sale in US and other important export markets? Why I ask is because it's already exports already account for more than 60% of our business now, and could be 70-75% perhaps in 2 years' time. So just wanted to understand this. Aside of whatever efforts we are taking on the domestic side, anything tangible that you can share in terms of milestones or goals for the domestic market?
See, our internal understanding of the business over so many years is that we cannot ignore the domestic market. We have to have a balance between the export and the domestic market. So it's not, we cannot say that we will be totally export-oriented business and will not be selling the products. We have worked out that a 60-40% ratio is a very comfortable business model for our company. If we can maintain 60% export and 40% domestic with a balanced growth in domestic and export, that's the ideal model for us, in terms of revenue generation, in terms of profitability, and in terms of the growth. So we'll be trying to maintain this level. Maybe, in 1 year it will be 65-35, but our efforts will be that we continue to grow in the domestic market and we continue to grow in the export market so that we maintain this balance of 60-40, and that is the present model, and that is giving us a profitability of around 40%. If we maintain the same level and if we grow, our revenue grows, our profitability will definitely increase from 40% to much higher level. So this is one thing, we have 100 products, but as you know, every company cannot sell all 100 products. Out of 100 products, there are about 60% products which are, better selling products. 40% products are low selling products. But we have to have a bigger portfolio so that we can cater to the market requirements. We cannot say that if 40% are not doing well, so we should discontinue. That's not our approach. We will continue with all 100 products. Rather, we are going to add more products. Our portfolio next year will be 150 products because we are going to about 50 products we are going to make in a new facility for bone grafting materials, oral hygiene, oral care, or medicated gels and disinfectants. So they are also going to produce about 30 to 40 products. With our research and development activity becoming operational in the first quarter of 2023, our research team is very actively involved in developing products. So we will be adding, more products in our existing business. Some products which are will be upgraded, quality packaging will be upgraded. So that's a process which is a very well thought of process that we have to add on more products to our product range for the domestic market, for the international market, and the market is demanding more products. Our dealers they want that Prevest should be a one-stop shop for them. Everything, all dental requirements, they want to be fulfilled by one company instead of running from one company to another company. They want that Prevest should produce most of the products which are essentially everyday requirement for a dentist. So our focus is that we have distributors in 80 countries. We are adding new countries. So we should produce more products so that, the dealers are comfortable buying products from one source and our company becomes a one-stop shop for them.
So your strategy and vision is truly commendable, and I really appreciate we are looking to be a one-stop shop globally and making Prevest a global name to reckon with. So there's nothing I have to pick over there. I just wanted to understand if we have about 20 products available, perhaps in 3-4 months' time for sale in US. Can we aim for 40 products in another 2 years? Why I mention US is just for illustration because it is the largest market and its perception is that it's the most stringent in terms of US FDA regulation. I'm sure Canada or Australia would not have it much easier. So just wanted to know how much can 1/3 of our product basket be available for sale in export regions, and if you could just give us a flavor like you have told us of the new products, are they going to be entirely different at the new facility that will be manufactured, or is it going to be some of the existing ones which will be manufactured over there? Also, I did not follow the capacity number which we are adding at the new facility that will be up by first quarter FY23 metric ton.
Okay, I'll explain. See, at present we have got approval, US FDA approval for 5 products. We have already applied to US FDA for another 15 products. It's very expensive, to get US FDA approval, product-wise. Cost is involved. We cannot go for 100 products at a time because a lot of regulatory documentation, regulatory requirements are. So we are going step by step. So we have phased out our US FDA approval plan that this year we'll have 20 products, and the next one is once we have the 20 products, and once the 20 products starts moving in the US market, we will apply for another 10 products because, there's a lot of cost involved. Each product, there's investment, and then we have to see our budgeting. We have regulatory compliances for other countries also. So we have to see how we can balance with the US market, US FDA clearance. But definitely we are not stopping here. We are not going to stop US FDA, applications or clearances. We will go ahead with our US FDA clearances for other products also, but it will be a step-by-step move. we cannot go for all 40 products at one time. We'll be going one by one. Maybe we take up another once we get the approval for. Already we are working on the next 5, 6 products. That once we get this, we'll apply for the next 5 products. So cost is also involved. We have to see the budgeting. We have to see that there are regulatory requirements of other countries. There is also a lot of costing involved. So we are trying to keep a balance that, okay, 20 products for US market, let these 20 products start moving. We'll apply for another 5 products. Over next 1 year, we'll have over another 10 products. So like that, this process is a continuous process and it will go on. Now, when we talk about the new facility is an independent facility. It is a part of the same business, same company, but it is a facility for manufacturing a different range of products. So it has a different product range. Its own capacity is separate. So the existing product, what we are manufacturing, we have about 85% capacity utilization. We are building more capacity through the IPO funds, so that will be sufficient for the next 4 or 5 years. So the new product line which we are developing is independent. So that's a fresh capacity, that's a fresh plant. So absolutely we are starting from 0 to 100% capacity will be available in the next financial year. So that is planned to be utilized in the next 4 to 5 years. So this is, overall business model that we'll have 2 product line, dental treatment product line, which currently we are manufacturing, then oral disease prevention products, so that, we can take care of the preventive products and curing products. So we'll have a bigger portfolio of the products, which will cater to the dental dentist for treatment and general public for prevention of their oral diseases.
Thank you. Ladies and gentlemen, due to time constraints, it was the last question for today. I now hand the conference over to Ms. Astha Jain for closing comments.
Thank you, sir. On behalf of Green Securities Limited,
I'm sorry, Ms. Jain, we cannot hear you very clearly. Can you please come on the handset mode?
Thank you, sir. On behalf of Green Securities Limited, I thank Prevest Denpro team for giving us detailed insight on the results and the time they spent on this call. I would also like to thank all the participants for joining this call. It was an extremely fruitful discussion. Thank you all for being on the call. I would like to hand over the call to the Margaret.
Thank you very much.
Thank you. Ladies and gentlemen, on behalf of HEM Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.